Hi guys, today we're going to talk about the number one risk with Bitcoin that you've probably never even heard of or even considered. We'll get to that here in a minute, but since we've got so many new people joining the channel all the time, I think it's probably important to review some of the other risks that are involved with Bitcoin before we go on. Let's start out here. Number one, I would say, would be the price risk. Here back in, if you'll notice this chart here, this is clear back in 2013. Bitcoin went from basically $11 clear up to a high here of almost $260. Then it fell clear back to $60. And then if you go through time, you can see it happens over and over and over. Here it was 90, and it went clear up here almost to 1200. That's the classic one. Nobody ever thought it'd surpass that, but it did. And then it came all the way back down here to 376. And you can go through here and you can just see Bitcoin has a lot of risk with it when you compare it to its life expected or its time span of this past 10 years. But you could just see the cycle happens over and over again. And it has these huge rises and falls, and it falls way, way back. It falls sometimes 70, 80, sometimes even 90% when it goes through all of this. So that's just something you need to be aware of. Many of you people that have already been in the space for a while, I understand, you are aware of that, and it can be pretty difficult to go through some of those times, especially if you made the mistake of buying clear up here at the peak. Because there's nothing worse than buying here at the peak and watch it go all the way down because you thought it was going to go up. So that's one of the issues that you have. One of the other issues you may or may not be aware of is you may get hacked if you hold your cryptocurrencies on a exchange. And there's numerous stories around going through all of this that go through all of this. And the real point of the matter is Bitcoin itself has never been hacked. No matter what anybody says, Bitcoin itself has not been hacked because it lives on thousands, if not millions of computers all around the world. It's not one central point of attack. So in order to hack it, you would have to go in and hack that one computer, that one wallet, and break the SHA-256 hash, which is by itself pretty difficult to do. Then you'd have to go back through time and change all those other computers in order to get yourself those coins. So this site here, it's talking about Bitcoin exchanges. Again, it's exchanges. Exchanges keep getting hacked because they're one point, a central vulnerability. So that is something I do not recommend. I do not recommend you keep any of your cryptocurrency on any type of exchange for no matter what reason, because they are a central point of failure. And as these articles keep pointing out, they're getting hacked because it's easy. They know they can go there because that's where all the money's sitting. So all they have to do is figure out how to crack that one exchange, and they get all the cryptocurrencies that are there. And then these people come up and have some good ideas on how to take care of your coins and how to secure them better. It's a whole lot simpler just to pull your coins off, put them in your own private wallet, and then you don't have that central point of failure where anybody can get access to them. If you do that consistently, you eliminate so many risks that you don't even have the exposure to. So that's my number one recommendation there for getting your taking care of your cryptocurrencies and preventing these exchanges from having your coins taken, or even on this one, it's a suspected insider job. And see, as long as they're on exchange, you're always exposed to that. If somebody internally wants to take the coins, they always have that access. So if you leave them on an exchange, you have the risk of having your coins stolen. So do not leave your coins on exchange. Here's the number one exchange of all time that got hacked. And technically, it really wasn't a hack. Because back when Bitcoin first got started, Mt. Gox was around. They were basically trading these Bitcoins back and forth like simple tokens you would use in any type of video game. And that's where the bulk of these people were using them. And Mt. Gox was like the only exchange in the world where you could actually get these coins. And it really wasn't a form of money back then. So that's where Mt. Gox gets its name. But to say it was a hack, it really wasn't a hack. They just had too many people coming in trying to redeem all of the coins at the same time. And so they shut down, and then somebody went out and took the coins away. So, and as I was saying, if you'll just pull your keys or pull your cryptocurrencies off of the exchange and use the proof of keys concept, which means if you don't own the private address to your coins, then you really don't own your coins. And that's what we always recommend over here at Easy Cryptocurrency. Because if you do that, then you don't have to worry about anybody else getting access to your stuff, because it is your stuff. And we further recommend, like with Bitcoin, you put them into cold storage. Then it makes them super impenetrable by anybody, because even if they know where your coins live, it's going to be nearly impossible for them to even figure out where they're at, let alone now they're in cold storage, which requires twice as much effort to get in there and get those. So that makes it even harder to go after them. And then you can use some of these software tips for securing your wallet. I would venture to bet most of you watching this video right now have exposed yourself to all kinds of software risk with your cryptocurrencies you shouldn't even be exposing yourself to. And I'll bet you the majority of you haven't even bothered to take the time to verify your software that you've put on your computer to verify your cryptocurrency software is actually from the developer who developed the software, so that you know that nobody's going to come in there and hijack your coins after you put them in there, because that is another huge risk that many people have not even considered. But that's not my number one. We'll get to that here in a minute. And like I said, if you want to store your Bitcoins in a good, safe, secure manner, I highly recommend cold storage, but I do not recommend it in this manner. They're saying use cold storage with an exchange. No, I do not recommend that, because you still have the vulnerability of that exchange there. So we do not recommend that you store your coins there. You need to do cold storage on your own, and then you make sure that you've protected yourself by taking them out of the exchange. And I don't know if you believe in John McAfee or not, but John McAfee, he's the founder of McAfee Antivirus, and he says that antivirus software that we're buying today on our computers is a waste of time. It's a waste of money. He says it doesn't work anymore. So don't bother. You're not going to be protected from some hacker or some malware coming in there and using a keylogger and stealing all your stuff. I recommend a whole bunch of other stuff that will protect you that are way beyond the scope of this video, and I don't have time to get into them on this video. But if you want to learn more, go over to the easycryptocurrency.com website, and we can start getting you educated on some of this stuff. Another exposure you're going to have with Bitcoin and cryptocurrencies is the cryptocurrency market is very, very volatile. It goes up, it goes way down, like I was showing you in the very beginning video. And this is this author's take on it. Well, he brings up some good points: no intrinsic value, lack of regulatory oversight, lack of institutional capital, thin order books. That's a huge one, because right now the market on Bitcoin is so small, there's only going to be 21 million coins ever produced total forever. And right now, most of the coins that have been secured are held in wallets that don't even move them. Most all of the wallets out there, I think it's like 70-75% of all the wallets, haven't had a Bitcoin transaction moving out of those wallets in years. And a lot of them go way back to Bitcoin's infancy. So that makes the amount of Bitcoins that are out there available to the public to trade even thinner. So it's been estimated by some experts that it may be as thin as maybe a couple million coins that are actually out there in the float that you can buy and sell. And those that are available to be bought and sold are not always being exchanged all that easily. And right now there's 17.5 million coins in circulation, but like I said, a lot of those aren't in float. A lot of those are secured. They're locked up in cold storage, and nobody's trading them. So you can kind of go out on the internet and research a lot of this stuff, but Bitcoin's going to be volatile for years to come, I predict. And as we get more and more to a decentralized market rather than these exchanges, where ultimately I think it's headed, I think that's where we're getting to, that we will see more and more of this volatility get exposed. Okay, and my number one reason or number one risk that I think you have when you get involved with cryptocurrencies like Bitcoin is, I think you may or may not be aware, but somebody else may have already placed a loan on your Bitcoins. So your Bitcoins are encumbered and they are tainted. And you technically, according to the law right now, from what I understand, I'm not a lawyer, I'm not a financial advisor, so you don't take my word for it, but I think it's a risk that you need to be aware of. But the first thing you do when you go to buy a house is you buy title insurance on it, at least here in the United States, to make sure there's no hidden liens or the title is clear, so you actually take ownership of it. And that's one of probably the strongest reasons why the United States has done so well through the years, is we can actually own property here in the United States with a title on it that says we own it, unlike so many other places in the world where some leader comes in and says, you no longer own that, my buddy Joe owns it. So that's the number one risk I believe you have right now in your cryptos, is you may have a loan against your cryptos that you may not even be aware of. And it may be something as simple as, you bought them from Coinbase, you bought them from Binance, you bought them from Kunomi or one of the other exchanges, and you think, well, that should be their liability. Well, according to as I read it right now, the liability doesn't side with them. It's going to be whoever owns the coin, even if you have the cryptographic proof saying that you own the coins with the proof of keys. Now, the state of Wyoming is doing some great work on this, trying to write some legislations that would put into an effect, if this goes through, that after 2 years, if you purchased your coins through, say, an exchange there, which would have to get set up here sometime in the future, you would have to you'd have to purchase your coins through the exchange in Wyoming. And then by doing that, after a 2-year window, if there were no claims placed against those coins, then you could come back and not have any liability on them, and you would hold them. That way, any type of forks that go forward currently, it seems like the exchanges are taking all the profits of those, selling those off and keeping those and never passing those on to the consumer right now. The state of Wyoming's working on the legislation for that too, and the big number one thing is there's no rehypothecation, which would mean that they can't take your coins or their coins at that point, if they chose to sell them later, and sell them to somebody else or use them as collateral for some type of loan or something. That greatly minimizes the risk for you. If you don't have to worry about buying coins that have a loan on them. For those coins now that we've purchased years ago, we may have some loans against them, or they may be encumbered because they didn't run the typical title insurance on them, and we didn't even know about it. And I wasn't even aware of that until here recently. One of my friends brought it up to me. So they bring up a good point. It's a risk you need to know about if you're going to be investing in this space. And I will give you my tips and tricks on what you can do, in my opinion. Like I said, I'm not a lawyer. This is not legal advice. This isn't financial advice. But I think it's something you need to be aware of, and I'll give you my tips and tricks on what I think you could do to hedge your bet to kind of protect yourself going forward. Joining these Bitcoins in another wallet doesn't solve anything. All of these coins are basically marked with, unique identification numbers. Everything can be tracked and traced. So just like everybody's saying that Bitcoin's anonymous, well, you can pretty much, I guarantee you can pretty much tell that they haven't done any research on this, because Bitcoin is not anonymous. It's very traceable. It's very trackable. Actually, the law enforcement agencies really like people using Bitcoin because it's so traceable and trackable, because they can track it right down to the IP address, who used it, what wallet got it, what date the wallet got it, and et cetera, et cetera. And then they can start piecing it all back together, and then they track the transactions going in and out of those wallets. And generally, it doesn't take them too long to figure out who the owner of that wallet is. So merging the coins with other coins really isn't an option. But if you want, click on this, or below this video, there will be a link, and I will give you, if you'll give me your email address, I will send you the tips and tricks I think you can do to help protect yourself against any type of these lien situations that might be out there and going forward. So with that, guys, good luck, and off to the next video.